Adrian here, CEO of Adrian Auctions and Training, and also Chief Auctioneer for Ray White, Quakers Hill, the Tesselin Group. It's the 4th of May, Sunday, and I'm coming to you as I do every week with my weekly auction wrap. And the national statistics told us that this week we had over 1,600 auctions, which is certainly down in terms of the volume, but obviously just given all the distractions we've had with Easter, Anzac Day, the election, that's to be expected. So you can start to expect auction numbers nationally to increase over that 2,000 auctions per week mark, which was certainly on par with what we've seen over the last 12 months. Now, we did see with those 1,600 auctions this week, well dominated by Melbourne, which was over 800 auctions, and Sydney with well over 500 auctions. So good to see some volume there in Melbourne, which is representing outstanding value at the moment. So many people we're selling for at the moment are looking to move to Melbourne. There is some great value, and I think that there'll be some massive upside in that Melbourne market there as well. Last week, throughout the nation in Australia, there was a clearance rate of 64%. That's very encouraging, given that the last couple of weeks, we did see that dip in that high 50s. Now, 64% is consistent with around 63 to 64%, which we have seen for the majority of this calendar year in 2025. So I'm very encouraged to see that clearance rate jump up at where it should be, and I think there's plenty of upside there as well for that clearance rate nationally to increase, especially given now that we have the RBA rate at 4.1%, and now we've suddenly seen inflation drop down under that 3% mark. This has been the mandate which has been constantly advocated verbatim ad nauseum, that Michelle Bullock, her predecessor, and the entire Reserve Bank, being two boards, one based on governance, that was one of the reform, and the other one based purely on discussing inflation, unemployment, and then also obviously deciding the cash rate at 4.1. Now that we've seen inflation go under 3%, that is underlying inflation, not headline inflation. As you know, headline inflation includes all goods and services, where underlying inflation is the most accurate metric there, because it does take on board and remove the volatile aspects such as fuel and food. So that's the main one to look at, underlying. Unfortunately, the mainstream media only focus on headline inflation, which is erroneous at all costs. So great news to see that that mandate has now been reached. There should be no excuses for the Reserve Bank. They've, as I said, ad nauseum been advocating for that, so do expect rates to come down. We will likely see 25 basis points in the next meeting, and I do feel that we are in store for at least 2 or 3 reductions for the remainder of the calendar year, as long as inflation stays steady, because they have been looking to reach that target inflation, which has been very sticky, as what the terminology is in the financial industry. But finally, it's dropped under that 3%, and now within the mandate, which is great. Now, throughout the day today, I was very fortunate enough to conduct 5 auctions for Josh and his team, and what an outstanding day it was. And out of those 5, we sold 4, all for record prices, and all for above the reserve. So what an outstanding initiative that was, and the average number of registrations was 4 to 5, and that is very, very encouraging. So we're seeing those 80% plus clearance rates, and I know other agents are struggling with that. And I do feel it comes down to over communicating with your vendor, over qualifying your buyers, marketing the property well, presenting the property well, and ensuring that you're working hard and focusing on customer service and also high integrity discussions with buyers and sellers and dominating your core market, which Josh and his team certainly are. So we started at 19 Sanford Street in Glen. That was a new suburb record for a single level, 1,357,500. Then went through to 39 Lovegrove Drive in the core market there of Quakers Hill, and again another record for a battle axe 3-bedroom for the suburb of Quakers Hill, and that sold for a great price of $1,180,000. Then we went to 79 Cowper Circle, also in the core market of Quakers Hill for Josh and his team. That's Ben, Marin, Sam, Laurie, all outstanding real estate, young professionals, terrific talent within that team there. And that was a $1.4 million result, which was over reserve, and quite a anomalous scenario there where we had a 12-month lease back. The owners did want to stay in the property because they are building in a different marketplace, and it was great to see a buyer who was sympathetic to those requirements and did buy the property with the 12-month lease back. And certainly the first time I've seen that in 35 years of real estate. I have seen 3 to 6 months, but 12 months is certainly quite an anomaly. And what an outstanding result at 1.4, especially given that was a failed campaign through one of the agents there in Quakers Hill. I forgot their name. They're quite unremarkable, but they were failing to sell that property for the owner, who the owner was quite disappointed there and very delighted with our result. Rosa, lovely vendor, 1.4, well done, and a lovely family who bought that as well. Then we went on to one at 22 Raycroft Avenue, also in the core market of Quakers Hill, another suburb record for a villa, and that was $895, and that was about 150 over the reserve price. Outstanding result there, and what good agency for Josh and his team to grab the underbidder, take them to a property that they've just listed, which has been 5 days on the market, and sell it to them unconditionally with a 66W late in the evening. That was a duplex at 97A Pagoda Crescent in the core market of Quakers Hill, and that sold for $900,000. So that's what you call forensic buyer work and urgency and also proactivity, and that's who you want on your team when you're selling and even buying, in fact, as well. Now, also nationally, some good news for the real estate market. The Home Value Index, which is reported each month through CoreLogic and RP data there, probably the most prolific and forensic repository of data for the real estate industry in the entire Australia. And it did show that April saw an uptick in property values, not clearance rate, but property values throughout the nation, and they're able to gain all that data through their algorithm and through valuations, and it was up by 0.3% in April nationally, and that was the third month in a row now, so that is very positive for the property market. I'm not sure what all the other agents and auctioneers are complaining about, because when it comes to our process and when you look at the objective data like this, you can see that the market is heading in the right direction. Now, not only did the Home Value Index go up in April and also the third month, but we saw every capital city and every state throughout the nation in Australia receive an uptick, because sometimes when you look at the average across the board, some states do better than others, but every single state, every city in Australia for the month of April went up in property value. What an outstanding outcome and result that is. Now, what we had obviously was the election. Now, there's certainly some things to discuss about the election and what the ramifications in a positive sense, in fact, now that the incumbent government, Labor, has remained in power. So now that they've been re-elected, all their housing policies are actually now going to be implemented, which is outstanding. And there's some really, really great ones which everyone should know about. So they're looking at 100,000 homes for first home buyers. They've committed to build that many properties with a $10 billion budget, which is terrific. And that's going to be over an 8-year period. And that's exclusively for first home buyers. What a great initiative that is. And they'll be built in partnership with state developers as well. So great to see that collaboration with government and the private sector there as well. Another housing policy which is now going to be in place is the 5% deposits. Now, what that includes is income limits under the first home buyers guarantee will be abolished. So they used to have certain thresholds. That's been abolished. So that now allows any first home buyer to purchase a property, and all they need is 5% deposit, and they won't pay LMI, which is lender's mortgage insurance as well. Then you've got the Help to Buy scheme, another outstanding initiative by the Labor government federally, where the government will cover 40% of the home's cost, okay? And they can actually buy out at a later date, and that could actually be expanded as well. But at this stage, you can have a 5% deposit, which is terrific, and the government will partner with you and the banks, and they'll take a 40% stake, and that way they'll just get their 40% back once the property is sold. So a great Help to Buy scheme. I love that one in particular. Then you've got the Build to Rent. So this is terrific, which will create more accommodation and encourage investors and builders as well. And once that happens, there's a ripple effect throughout the whole industry, including accountants, solicitors, tradies, real estate, accountants, the list goes on. So property developers can now access tax incentives to build apartments with a portion of units that have to be rented as affordability, which is really below market value. Then you've got the apprentice incentive payments. So payments up to $5,000 would be made to apprentices in priority areas, including construction primarily, who complete their first year of training. So that's going to keep people studying a trade, and I think that's a terrific apprentice initiative by the Labor government. So well done, Albo there. Then you've got the foreign investor ban. So foreign buyers would be temporary banned from buying into the housing market for 2 years. Now, that could be a bit controversial because there are some luxury markets, especially the harbourside market, which are relying on foreign investment. However, it does push out a lot of local buyers, and it can inflate some of those harbourside and upper and lower North Shore premium markets. So that could be a little bit controversial, but nonetheless, it's good to see Australians buying Australian property. So that 2-year ban, in my opinion, I think is an outstanding result. Not that I'm xenophobic or racist at all, but Australia has a dream to own property, and it's good to see Australians having now that opportunity over the next 2 years not to be outbid by people who basically do have a competitive advantage because they're coming across with huge funds from other countries. Now, finally, the last one, I know the list goes on, but it's really important to know this. It is a federal election, and there's the housing policy. It really was an election of housing policies. And the last one was the Australia Future Fund, and that is also a $10 billion program to build 30,000 social affordable homes, which is government housing there, which will be continued to roll over also to the next term of Parliament as well. So that's a wrap up from me. So I've given you a local market wrap in terms of what I achieved today, and Josh and his team from Ray White Quakers Hill, and then also holistically a national update, providing you a lot of information there around clearance rates, inflation, and also the housing policies that are going to be implemented due to the election result, which was quite resounding. So God bless. Look forward to seeing you next week. Adrian Bow out.